We're very happy with our performance for the first quarter of 2024. In fact, this is the best performing first quarter we've had in Mansa-X since the inception of the fund. So we're very proud about this performance. If you look at the Kenya Shilling Fund, we returned 5.62% for the first quarter of 2024. That's an annualized return of about 22.48%. This is net of fees. For the dollar fund, we returned 3.48% for the first quarter of this year, and that's an annualized return of 13.92%. Again, this is an excellent performance. We're very happy about it. It's the best performance we've had since we started Mansa-X, and we're really hoping that our investors are just as pleased as we are. For the first quarter of this year, we saw a continuation of the stock market rally. This is actually something we had talked to our investors about at the end of last year. We actually expected the stock market rally to continue, and this actually played out. We saw the S&P gain about 10% in the first quarter of this year, the Nasdaq about 8.5%. So this was very interesting, and of course we were really able to squeeze out a return out of that. It was also very interesting to watch the commodity space, very interesting moves there. We saw gold, for example, gain about 8% in the first quarter of this year. We've been seeing a lot of gold purchases, especially in China, both by the Central Bank of China and also the retail investors in China. So we expect that gold will remain elevated because gold also tends to be a safe haven asset. So when investors are particularly uncertain about the future of markets, they tend to also stock up on their gold holdings. So we expect that gold will continue to be a very good asset to hold within the fund, and this was proven in the first quarter of this year. Another very interesting asset, of course, was crude oil. Geopolitical tensions continue. We've talked about this for the last 1 year or so. We continue to talk about it. Middle East tensions haven't reduced. We expect this to continue. And this caused oil prices to spike by about 16% in the first quarter of this year. Again, in commodities, the most interesting asset class there was actually cocoa. We saw cocoa prices jump by about 134%. That's quite significant. This was mostly due to shortages of cocoa in West Africa, and of course demand for cocoa continues to be elevated globally. So this is also something, again, we are able to trade in Mansa-X that I think gives us quite an edge, and we were able to take advantage of that. Locally, and from an African perspective, one of the most interesting asset classes that we are holding was Eurobonds. We talked about this at the end of last year when we talked to investors about why we hold Eurobonds. We always felt that a lot of African Eurobonds were undervalued, and this was proven in the first quarter of this year when the Kenyan government did a tender offer for Q1'2024s, where we were able to actually participate in that and get absolutely very good value for the bonds we were holding, and that came at a great profit to our investors in the fund. So Eurobonds was a very good performing asset in Mansa-X and continues to be. We still believe there's a lot of valuation discrepancies on African Eurobonds. On the fixed income side, outside Eurobonds, US Treasuries as well, we saw a lot of volatility there and yields dropping, which we also took advantage of as well. So the Q1 was an exciting quarter, more of a validation of expectations that we had as fund managers from the end of 2023, and we really just rode the wave, so to speak, into Q1. Most of our positions remained unchanged for Q1 and tended to be largely profitable for investors. Well, the question about the shilling is obviously something we've had to be dealing with as fund managers for the last 2 years. And our investors have always been concerned about the volatility of the shilling. So I'll just explain this again. Within Mansa-X, we create dollar exposure through derivatives, meaning we don't actually have direct foreign exchange exposure to the dollar against the shilling. So whether the shilling is weakening or strengthening, we can still create dollar exposure, which we then use to invest in our foreign assets like stocks and Eurobonds without directly having to create exposure to clients on the spot market, what you call the spot market. What this means is, as fund managers, we don't go out into the market to buy dollars, to then buy Eurobonds or to then buy stocks in the stock market. We engage in all manner of derivatives, the simplest being, of course, forex swaps. So we can swap out our shillings for dollars and then use those dollars to invest in these asset classes. Such instruments allow us to be foreign exchange neutral. And this is the reason why the fund is able to perform and outperform even when either the currency is weakening radically or strengthening radically, as happened in the first quarter of this year. That said, however, we still felt at some point that the shilling was drastically undervalued at some point when we had an analyst pointing to the shilling weakening towards the 200 levels. We felt that a lot of weakness of the shilling was due to a sentimental bias, mostly because there was an overweight fear about Kenya defaulting on the Q1'2024 Eurobonds, which, if you remember last year, in the last YouTube video I made at the end of 2023, we made it very clear that at Mansa-X, we actually felt that there was no chance the government was going to default on the Q1'2024s. And for that reason, we still felt that the shilling was going to, at some point, be redeemed against the dollar, which is what happened in Q1 of this year. That said, however, we still believe that an approach such as the one that we use of creating dollar exposure through derivatives still helps us to focus on the asset class that we are buying without being unnecessarily worried about the foreign exchange volatility, which would then affect the return for clients. So Mansa-X is very, obviously not 100% FX neutral, but we are largely foreign exchange neutral due to these strategies that we employ within the fund. Now we'll discuss the top 10 holdings of Mansa-X. I think we've been doing this for about 2 years now. This is something that our investors actually asked us to be doing, and we're very happy to have this engagement with you, because it has also helped our investors to understand where majority of their returns come from. So our top 10 holdings, and again, before I start, these top 10 holdings are very well explained in your fact sheets for our investors and also potential investors, where we actually outline these top 10 holdings, including their geographical distributions in the fact sheet. So our number one top 10 holding for the dollar and Kenya shilling fund was actually Eurobonds. It still remains the Eurobonds. However, the percentage has reduced. Okay, as I explained earlier, we had a lot of profit taking on our Eurobonds, which we were very pleased about. Again, we had a very good return from most of the Eurobonds that we are holding, some of which we've been holding for more than a year. And our holding therefore reduced from almost 30% of the fund now to just slightly above 10% of the fund. However, that helped us to take profits on that. We are still holding some Eurobonds. We believe a lot of African Eurobonds that we are holding are still grossly undervalued. So we still feel that this remains a very interesting asset class to hold, especially being a dollar-denominated asset as well. And again, like I mentioned earlier, these dollar-denominated assets like Eurobonds are financed within the fund through derivative contracts, and therefore we do not actually create foreign exchange exposure to investors. So this is something that investors should not worry about. One of the other big asset classes that we were holding was crude oil. As I mentioned, geopolitical tensions continue to give us the view that crude oil will continue to outperform most other commodities. It jumped about 16% in the first quarter of this year. We expect that crude oil will slowly trend upwards because we don't see a quick resolutions to most of the geopolitical tensions as they currently stand, whether it's in the Middle East or what's happening with Russia and Ukraine. And of course, currently, we also have the new concern about weather. We've had a lot of flooding, even in non-traditional areas like Saudi Arabia. Again, this is something that we think will continue to push oil prices up. Some of our stock holdings there, were Microsoft. We were holding Microsoft, Nvidia. The AI revolution means that we continue to be very bullish on chip companies, chip manufacturing companies like Nvidia. So these are companies that we continue holding within the fund. We expect that will continue creating a lot of capital gains for our investors. Both Microsoft and Nvidia remain our top favorites. And then on the pharmaceutical front, Novo Nordisk and Eli Lilly, our favorite stocks in the pharmaceutical sector. Therefore, they fall under our top 10 holdings as well. We are big fans of Ozempic, the drug, here at Mansa-X, the obesity management drug that's owned by Novo Nordisk. This has actually pushed the Novo Nordisk stock up by almost 25% in Q1 alone. We expect that this will continue. Demand for that drug is really high. So we expect that the revenues for Novo Nordisk will continue to be high. Dollar holdings against various currencies around the world. Again, that remains a currency play that played out pretty well as well. And all these positions, this time in the top 10 holdings, we typically have long and short positions. But this time in our top 10 holdings, almost every position was a long position because we were actually bullish all these asset classes that I've mentioned. If you look at the Mansa-X dollar fund top 10 holdings, at number 10 you see the Japanese yen. That's a typical short position. So we were short the Japanese yen. There's a reason for this. From an interest rate parity perspective, the Japanese yen is one of the last currencies from a central bank perspective to lag the other currencies in terms of interest rate hikes. The Japanese central bank has been at a negative interest rate regime for a while now. So before, the Japanese yen has always been at negative 0.1%, and a recent 20 basis points increment actually just took us to 0.1%. This means that all the other currencies, which are way above 5%, are obviously performing much better than the Japanese yen, especially against the dollar. So we were actually short the Japanese yen. The reason I'm highlighting it is really just to demonstrate how our top 10 holdings can have both long positions and short positions, and the Japanese yen is an example of a short position in our top 10 portfolio for the dollar fund. So for the second quarter of this year, as often happens in markets, when you have a very high momentum period, like we've had in the first quarter of this year. We've had a very good rally at the first quarter of this year. Of course, we expect a period of consolidation. So that's one of the things that we expect in the second quarter of this year. However, what can give investors comfort is if you look historically, if you have a very strong first quarter in equities, that tends to last, it tends to be a very good way to start the year. And therefore, we still expect that stocks would generally do well, but we expect a period of consolidation for the second quarter. On our side, therefore, what we will do, we'll probably create a lot more hedged positions from our long positions to maybe increase a little bit of shorts just to make sure that the book is well hedged and balanced. Again, one of the big advantages that you have when you invest in Mansa-X, the fact that even during a period of consolidation, we can increase short positions to maybe hedge out, our long exposure in a lot of these asset classes that we are long in. Interest rates will be a very interesting space to watch. We have a very inverted curve for the U.S. Treasuries, with the 10 years closing at about 4.21 and the 2-year Treasuries at 4.63. We expect yields to tick higher, so we expect maybe the 10-year Treasuries to trend towards just under 5%, and maybe the 2-year might actually touch. The 2-year might actually touch the 5% level. So this is something we'll also be watching, meaning that obviously bond prices, we expect them to actually be lower globally for fixed income. But locally for Eurobonds, we'll be watching that space as well. On the flip side, locally we still expect a lot of demand for Eurobonds, which might actually push Eurobond prices higher. whereas this seems to be a bit contrarian based on our expectations of interest rates, it's really a supply versus demand issue, where we've seen a lot of fund managers seeking to include Eurobonds in their portfolios. So for this reason, we expect African Eurobonds to do very well, predominantly Kenyan ones, which have been the favorite for fixed income traders globally since the Eurobond trading started. We'll also be expecting rate cuts in Europe and the UK. In fact, by the end of this quarter, we expect that the Europeans and the UK would have started cutting interest rates significantly. So this is a space we'll also be watching, which would also create opportunities for equities on the European continent as well as the UK. Commodities, which is also one of our specialized areas in Mansa-X that we trade in. We expect a rally in crude oil to continue again because of geopolitical tensions, which we don't expect to reduce anytime soon. So because of this, we expect crude oil prices to continue rising. Soft commodities have largely underperformed in Q1. When you look at most soft commodities, we did not see a rally in prices. However, an outlier, like I mentioned earlier, was cocoa, where we had an outperformance of 134%. That was really huge. We expect we'll be watching that very closely. Again, commodities like coffee are also assets that we'll be looking at. We expect the rally also to continue in coffee prices. Metals, gold, we expect gold to continue rising in prices, mostly because of, again, as we continue seeing uncertainty in markets and expectations, it remains a good safe haven. But the biggest driver for gold prices, we believe, is actually what's happening in China. Both central bank buying of gold and also retail investors in China actually buying gold, even physically, as the economy continues to improve over there. So this is something we'll be watching very keenly. Again, Q2 is a very interesting quarter because of earnings. We expect that most companies in the S&P 500 will continue posting very positive earnings. We've had a very good run in terms of earnings for most companies on the S&P 500. This is expected to continue, and this might be the fourth consecutive positive earnings quarter in the S&P 500. This, again, we expect we should keep stock prices very well supported for Q2. So Q2 is still a very interesting quarter. We still expect that returns will be very good in terms of performance of most of the assets that we are holding. We'll be watching locally dynamics around fixed income as well, because, for example, we feel that the yields in Kenya should be topping out right now. So we actually believe that we'll see yields actually starting to trend lower in the local context as we continue to manage inflation. We've had very good weather. We continue to have very good weather. This should really reduce inflation numbers in Kenya, and this should translate into lower yields across board. So again, this is something that we'll be watching very closely. We also trade local Kenyan bonds, and that's the reason we track yields, Kenyan yields, very closely as well. So Q2, we remain very positive. We have a very positive outlook in terms of opportunities for fund managers to squeeze out a return. Even if you look at it from a volatility perspective, we expect, for example, volatility in commodities to be highly elevated. One of the things that we're able to do in Mansa-X is that we're actually able to buy volatility itself as an instrument, and we're able to buy volatility and go long volatility, meaning that we can actually benefit if we have more volatility in markets. We've seen a lot of investors asking us whether they should be concerned when there's volatility in markets. This is just to emphasize that volatility in markets is something that we actually take advantage of, and they should even be happier if they see volatility being elevated in markets. So Q2, we remain very confident and we have a very positive outlook, and we believe that we should be able to have a very exciting quarter, and that should translate into a good return for investors moving forward. As part of our innovative approach to fund management, one of the things we've realized is because with elevated volatility, there's a need to take advantage of short-term exposures. Typically, this is very difficult when you're a fund manager dealing with a very large portfolio, most of them with very long-term outlooks. So for this reason, we've actually automated part of our trading, especially the ones that deals with day trading, which is really the short-term exposure management of the fund. And we've been testing this system for about 5 years or so, and we are very happy to see that it's actually finally bearing fruit. So this is, again, something we expect should squeeze in a slightly higher return for our investors moving forward. So I'd like to take this opportunity to thank our investors. You believed in us from the beginning. We've been running this fund now for over 5 years, and during this period, we've been able to prove the concept that Kenyans are thirsty for investments that expose them to asset classes outside the traditional asset classes that they used to be resigned to. And on top of that, it has also demonstrated that this also tends to create a higher than average return for them. And this is something we're very proud of, and this would never have happened, would never have been proven without the kind of belief that we get from you as our investors. So thank you so much for that. And it's also very important to mention that during this period, we've also gotten a lot of support from our regulators. If you look at Mansa-X, now we are categorized as a special collective investment scheme, a special CIS. That's a new categorization of CIS, and we really are the first ones to be designated as that. And that's a very, very big vote of confidence from the CMA, and we're very thankful for that as well. Very recently as well, we were also licensed to also start managing pensions, and we got a license from the Retirement Benefits Authority, RBA. Again, this continues to give us a lot of confidence that what we are doing is right, and this again would never have happened without the kind of inflows that we get from our investors. We are now managing about 30 billion shillings, and this is consolidated from about 15,000 investors. So we're very thankful to all those over 15,000 investors who have invested with us, and again also the investors who are looking to invest with us. We continue to create new products for all types of investors. We mentioned at the end of 2023 that we even now have a Sharia version of Mansa-X to again be able to include our Muslim clients. And on top of that, we will also be creating new products very soon that will actually reduce the minimum investment amount that you can invest in Mansa-X. So we're trying to encompass everybody, improve how we manage the fund in terms of making sure that the fund is efficient enough to give you a good return, but also create a fund that also allows everybody to participate. So once again, thank you very much for investing in Mansa-X, and looking forward to a great quarter ahead. Thank you.